Welcome back. This is Chile Davis. I'm back to another video, and I'm going to talk about three stocks. I want to welcome back my subscribers and welcome back to my new viewers. And today we're going to cover three stocks that will report earnings this week. Oracle had a great year, and they will report on the 13th. So that will be on Monday. Nike will report on the 23rd. And a big cloud stock, Adobe, will report on the 21st. So these are three stocks I'm going to talk about today. Oracle, over the last 5 days, have been down a little bit. Let's see. It is trading about $89 per share. And as you can see, it's only been up 0.37 on the last 5 days, week. And I believe on Friday, it was just flat again, between $89 and $90 per share. Not much to talk about. But if you look at Oracle, a lot of people, if you've been around in IT or software, they were like the original big software company way back in the early 2000s. One of the founding members, Larry Ellison, a lot of people are familiar with his name. His company, Oracle, was on par with Microsoft at one point in the early 2000s. It says Oracle is an American multinational computer technology headquarters, and they basically did databases, and they competed with Microsoft in terms of servers and Microsoft SQL servers. Well, now there's so many companies that are just in the cloud. You don't need the hardware and the servers and all the equipment you did, but Oracle was the name, was synonymous with Microsoft back in the early 2000s. But needless to say, over this last year, they've had good growth. Last year, if you'd have gotten to Oracle, you could have got in at about $60 per share. And so today they're trading about $90 a share. We'll see what they have to report this week during their earnings call. And like I said, they've had a great year. Oracle reports earnings on Monday, what to expect. Says strong cloud business, cash flow, and focus. So looks like there'll be some good numbers for the quarter, and then also probably guidance moving forward. Oracle is one of those companies that, yes, they have the legacy, but they haven't been as flashy as Microsoft. If you know anything, Microsoft trades anywhere from $280 a share to $320 per share. So in comparison, Oracle has fallen behind, but it looks like their new cloud business strategy is coming into play, and they've been able to execute over the last year. As you can see, the stock was trading last September at $60 per share, and today they are trading at $90 per share. Also, a quick note about Oracle, the founder of Salesforce. So Salesforce is a great stock, a cloud stock. It's more of a pure cloud stock. Salesforce was at one point employed by Oracle. So Marc Benioff was like the number 2 or 3 guy at Oracle years ago, and he decided to go out on his own, and he was successful. He created Salesforce. So there were some good things that came out of Oracle. But like I said, a lot of people in the new wheels of technology don't know as much about Oracle, but they've had a phenomenal year. As I stated, they've seen almost 50% growth over the last year. So that's Oracle. Check them out on Monday when they report. Monday, they will report Q1 earnings. Okay. And the next stock we'll talk about is one of my favorites, is Nike Incorporated. Again, Nike, everyone knows about the apparel. Everyone knows about the sneakers, the Michael Jordans, the LeBron James, can't think, there's just so many super athletes that wear Nike brand. And like I said, they trade right now at about $163 per share. They also do pay a dividend, and they've seen good growth over the last year. We thought that Nike would stall. They did stall a little bit, but even after the pandemic, they were able to come out of it. So look to Nike. They will report on the 23rd. So roughly about a week and a half they report. So it's the 12th. Yeah, about a week and a half. So 10 days from now they report Nike, but it is a great stock to own. I've owned it for quite a while. And also I was able to pick it up during the pandemic. So over the last year, you could have got Nike. Let's go back. At the bottom of the pandemic, you could have got more Nike share at $67 per share. And it is back to what it was prior to the pandemic. In general, any of these like super good stocks, I'll just say like JP Morgan, Disney, trade about $100 to $150 per share. Now, Nike is a great stock because they sell sneakers and apparels, and they're like an integrated part. I mean, basically, Nike sells, billions of dollars of shoes, and they are established. They do pay a dividend, as I mentioned earlier. And then they also were able to, during the pandemic, transition to a more digital platform. So before, Nike was like a more multi-channel type of company. For example, they still sell through Foot Locker and Hibbett's and Dick's Sporting Goods and Academic Sports, but now they control more of their channel of customers that can buy directly from Nike online versus their partner stores. So that's one cool thing about Nike. They were able to transition during this last pandemic. As you see, like I stated earlier, the stock was traded at $67 per share. Had you grabbed it after that and knew the power of Nike, you would have known they could have got back to the 129 or 130 per share. So good stock, Nike. Like I said, it's a really great company, international. The people in China love the clothes. It's got like an Americana vibe to it. And I look to expect good earnings in about 10 days. As you can see, though, the stock's trading right now between, let's see, the last month. Yeah, the stock is trading about 160 to 170. Not that much great. Like I said, they're all in that channel to me, like the Nike, the Disney, and JP Morgan. That $100 to $150 per share, yeah, it gets a little high at 160, 170, but not really that much different. I just call them like, they're like trophy stocks. So it pays dividend $67. And I'll just look at same JP Morgan. Again, if you look at the stock, pretty much the same pattern. Over the last year, they've been up 53% since over the pandemic. And then if you look at the year to date, I mean, it's like what, 140, 150-ish. So you don't see a whole lot out of these type stocks, some of these trophy stocks, what I like to call them, but they do pay a steady dividend, and they do kind of keep up with the time. So if overall the stock market goes up, stock like JP Morgan, Disney, and Nike will go up. So let's look at Disney, because one of my favorites too. They have a lot of assets. Disney, as you know, they own Marvel comic books or Marvel Studios. They own Star Wars. Let's get year date. And again, if you look at Disney, this was prior to the pandemic. They were trading at 140 per share. They dropped down, and after the pandemic, since they've recovered to more than 140 per share at 180 per share. But again, don't expect a whole lot out of Disney. Again, to me, I feel like it's a trophy stock. I think this temporary non-payment of dividend is okay. They'll be back once everything goes back to normal. But again, great stocks, good assets behind the company, multi-channels of cash flow, but I don't see any like super triple, growth coming out of. I don't see like them doubling, like a Amazon in value in terms of share price. But a solid company. So if you want to own a solid company, Disney is one of them. I just like to put that out there. And then fortunately, if you could have caught it during the pandemic, you could have got in at 117 and seen a nice little, let's just say you would have seen a nice 40% growth in the stock, at least if you'd have caught it right after the pandemic started. So anyway, those were just 3 stocks. One more is Adobe that will report on the 21st. So not this week, but basically the following week. Let's see, not this week, next Tuesday. Adobe, again, Adobe is, a major cloud stock. Trades at about $650 per share, has a 52-week high of 673. What is, they have a CKI for what is Adobe projecting? US tech giant Adobe appoints, okay, a female VP. I like cloud stocks, but something trading at about $650 per share, I'm not sure how much higher that can go. Of course, you can always reference CNN. Let's see, CNN Money Forecast if you have questions about a range on a stock. So let's just do CNN Money. Because I think like some stocks are just like legacy money, which, if you're a new investor, you're not going to get anything out of buying a stock like Adobe. You'll see some growth. You might get a 20% year over year growth. But let's just look at the forecast, what analysts have to say about Adobe. Like I said, the stock is trading $658 per share. Over the last year, the stock has only been up 35%. It's a behemoth, don't get me wrong. Back in the day, in the early 2000s, Adobe was the software to have. If you were a graphic designer, Adobe was the software to have. Now they found more of a subscription base, just like Microsoft Office does, where you pay a premium per month or pay an annual subscription year price, and that's how you get the license or you get access to the product of Adobe. But I don't still see a higher upside than 680, maybe $700 per share. But let's see what the analysts have to say. Okay, so the analysts, 22 analysts over 12 months, have analysts say the stock is going to go up anywhere from $659 to $750 per share. So let's just look at that really quickly. So trade at 659 minus 750 gives you a run growth of 95 over 659. Only a 14% potential gain in a stock. It's a great stock. It's a behemoth. If you want to look further at revenue fundamentals, their earnings is $3 per share, $3.9 billion. But I'm not going to see that much more growth out of Adobe. So, but I don't doubt that they'll have good earnings this week, or excuse me, next week, when they report on the 21st. But as I stated, they have a 52-week high of 673, and the analysts at least 22 have said the stock could go as high as 750 per share. So like I said, good company, good quality fundamentals, good cash flow, but I would not be looking to buy into Adobe. Just doesn't seem like a lot more growth to go for me. If I was to go into a cloud stock, of course, I'm in Okta, I'm in Twilio. Let's see. I don't know. Let's see, Adobe. What's Adobe stock competitors? Let's just see. I'm on Market Beat, and it says Adobe stock competitors. They mentioned Facebook, NVIDIA, PayPal. As I talked about earlier, CRM, Salesforce. Yeah, these are competitors at least suggested by Market Beat. And again, like I said, if I was in the buying mood, I would not be buying Adobe. There's just too many other cloud-like stocks. If I was to buy anything, comparison to Adobe, not that I don't already own PayPal and I already own NVIDIA, but a company that I would look into is called Salesforce, ticker symbol CRM. And if you look at Salesforce over last year, they're up a little bit, but let's just do over the last 5 years. If you'd have gotten a stock back in late December 2018, the stock has doubled since. So I have a whole lot more hope and feel of future potential for Salesforce than Adobe. So let's just look at what Salesforce has to offer, CRM, in the next 12 months suggested by analysts in terms of what they may have going. Okay, so Salesforce has a forecast of $350 per share, and that's by 40 analysts suggest, and I think that can happen. So if I was to, look at a potential another cloud stock or software stock, compared to Adobe, it would be Salesforce. So yeah, this was my quick video about the week coming, Oracle reports, Nike reports, and Adobe. And I just wanted to talk about those three stocks and the value they provide and their potential revenue coming for the next quarter. So I want to thank you for watching. Thank you for listening. Please like, share, and leave your comments below.